You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is on the Q2 earnings. The company on our radar today is Thomas Cook India Limited, and the company has reported stellar set of numbers for Q2. On a consolidated basis, we've seen that the total income from operations for the company has grown 52% at 1,871 crore rupees. The EBITDA has also shown a strong performance. It's up by 139% this time around to 130.8 crore rupees. The margins have improved to 6.98%, and the profitability has jumped 343 times on a consolidated basis to over 51.5 crore rupees in this quarter. To discuss some more insights on the earnings, what led to the strong performance, and will it continue to be a strong show even going forward, with us is the top management of the company. Mr. Madhavan Menon joins in. He's the executive chairman of Thomas Cook India. Welcome to Business Today Television, Mr. Menon, and thank you so much for taking the time out. Congratulations to you on the stellar set of numbers that you've posted. Help us with what really contributed to the strong performance, and more importantly, is the bottom line, the growth there, the stupendous growth that you have seen, is it sustainable going forward?
Good morning, Sakshi. Thank you for having me on this show. So yes, we had a decent quarter. And we reported significant growth over the previous year, same quarter the previous year. You must understand that, if you look at the recovery journey that we witnessed in the travel industry, we went down all the way to no revenues during the pandemic. And we started a recovery process sometime at the end of 2021. And I think this recovery process is now complete. And we are on the back of growth that we witnessed in the post-pandemic era. So if you look at our profit margin,
Mr. Menon, can you hear me? All right, we'll try and get back to Mr. Menon. I think there is a technical glitch, but let me just revise for all our viewers out there. The key numbers definitely show a strong performance on the bottom line, on the top line, and on the operational levels as well. Remember, the management is talking about how the company, as well as the travel industry, has actually come away from the pandemic blues that we've been seeing impacting the industry. Okay, Mr. Menon is here with us again. Mr. Menon, you were talking about how things have improved for you. We've had the worst period go by, about 2.5, 3 years of sorts, where the travel and tourism industry really felt the pain of COVID-19 pandemic. What we want to understand is that, is this the kind of performance that you've posted, is it a resultant of people coming back to the travel industry, taking it as a revenge? Travel had become a trend as well, after the pandemic. And have you also reached the pre-pandemic levels as well, is something that I wanted to understand.
So, Sakshi, let me explain that by several questions. Let me break it out. So in terms of the recovery, I think the recovery process is complete. And sometime in the last quarter, at the beginning of the last quarter, I think when we are now back to growth in terms of what the industry is representing as a trend. So I think we are riding that trend. A second important point is, if you look at our EBITDA margins, they've grown significantly from a year ago. And this is on the back of the recovery as one. Secondly, as we went into COVID, we re-engineered our costs completely. We undertook a lot of things like integrating the back end of SOTC and Thomas Cook.
Sure. All right. I think there is a technical glitch again. We will get back to Mr. Menon in a bit, but he's been talking about the operational profitability that the company has seen an improvement of. He's also talking about the synergies with SOTC that the company has been working towards, and how that has aided the performance this time around as well. And with the kind of move that we've seen, of course, the recovery process is complete, is what he has mentioned. Mr. Menon, please continue with your answer.
So our EBITDA margins improved on account of a variety of steps that we took during the pandemic which included digitization of our processes. We re-engineered all our costs by integrating the back end at Thomas Cook and SOTC. We moved a lot of our overseas costs to India, so we were effectively able to reduce those costs. So today, when we look at our costs, it's literally only 70% of the costs that we were registering pre-COVID. Now, this 30% saving is dropping to the bottom line, and which partially explains the growth in the EBITDA margin. Now, talking about sustainability, I actually believe that we in the industry are witnessing a lot of new trends and have good reason to believe that this growth will sustain. It may not grow at the same rate as we are witnessing now, because obviously it's off a lower base, but the reality is it will continue. And I believe that we will see improved profitability over the next few quarters. Just to give you an indication, if I look at my forward bookings for the upcoming quarter, we are actually seeing a 32% growth over the previous year. So I can tell you upfront that the volumes are better, our costs are static in terms of what they are. So I expect that this profitability run will continue for a couple of quarters.
That's wonderful, sir. And since you talked about, the current quarter, the October to December period, where we look at the festive-led travel as well. And of course, this time around, we are also looking at the World Cup, and you're talking about the forward bookings that have seen an improvement. Could you break it for us? Where is the maximum demand really coming in from for this current quarter too?
So we have not seen any effect of the visible evidence of seeing a World Cup effect. But I think what we are witnessing are a couple of trends. We're seeing that the average age of travelers who travel with us has dropped by nearly 8 years. We're seeing people take more frequent holidays.
Sure. Okay. We'll try and get back, Mr. Menon, but he's very importantly pointed out, what we were anticipating, that the travel and tourism industry could be witnessing domestic surge of travel on the back of World Cup tournament being held in 12, 13 cities in India. So that perhaps has not translated into a visible trend, is what he is really mentioning. So that's a key takeaway, that although the forward bookings for him has grown up 32% odd, what is actually not happening is that the World Cup led visible trend in travel is not being witnessed. That is something that he's pointed out. Another very important point that he's pointed out is that as a major travel trend, the average age of travelers has dropped by almost 8 years. So younger people are now taking to travel, and that's a visible trend as well. And that is leading to a spurt in demand too. We'll continue to speak to the management as and when the network gets better to get you more insights on the earnings. But for now, stellar set of numbers, management confident of the profitability run to continue. Maybe the record jump that we have seen, of course, that may not be possible because of the lower base, but the sustainable profitability is something that he's betting big on in the future quarters as well. We'll get you all the insights pretty soon. Many thanks for joining us onto this special edition. Until then, and do stay tuned on to Business Today Television to catch all the updates from the world of business and stock markets.
everyone. Welcome to Business Today Television. I am Siddharth Zarabi, and with me now is the Managing Director of Indraprasth Gas Limited, Kamal Kishore Chatiwal. Welcome to Business Today Television. Let me begin by asking you to tell our viewers and take them through the key highlights of your second quarter performance.
Yeah, if you see the key highlights, we have clocked a revenue of 3804 crores, and sales volume is around 8.3 MMSCMD, and the total in MMSCM terms is 764. Now, EBITDA is at 656, and profit after tax is at 535, which is an increase of 29% as compared to the last year's Q2. And profit before tax is 686 as compared to 543 in the Q2 of last year. EBITDA per SCM is at 8.6.